Let me ask you something honestly. If you're a Sharia compliant investor in India today, are you actually confident about your investment strategy? Not just where you're investing, but why you're investing there. Because what I see with most investors is this: they either invest in 2 to 3 mutual funds which are available in the market, or they try stock picking and then get stuck in confusion. And the biggest problem is consistency. Now imagine this: if you're someone who's investing in direct stocks, instead of guessing them, you are investing in structured, rule-based, professionally managed portfolios built specifically for Sharia investors. That's what small cases are. And in this video, I am not just going to show you the 5 different small cases. I will also help in terms of breaking them down in a way that you will actually understand which one fits you, which one doesn't, and where people usually make mistakes. But before we start, let me introduce myself. My name is Latish and I help with planning your finances for investments through small cases, mutual funds, and Sharia compliant ULIP plans. If you are planning to invest in any of these, you can always contact us on the number which you see on the screen. Also, I have put the Smallcase links in the description. If you want a discount on the subscription or help building your portfolios properly, do reach out the number which I have shared, because blindly picking even a good small case can still go wrong. Now let's get into it. Before we even touch the first small case, there's one concept you need to understand. Small cases are not mutual funds. You can't start with 500 rupees. You need a minimum investment upfront. That's your entry point. And after that, you can invest monthly like an SIP. So practically, you enter once, then you build over time. Now, this minimum investment can vary from about 17,500 to about 60,000 as well, depending on which small case you choose. And this is where many people make a mistake. They try to time entry. Don't do that, because real returns come from discipline after entry, not during the timing of the market. Let's start with the first small case. The Zamzam Capital's Sharia leader Smart Beta. Now this is very intelligently designed portfolio. And to understand this, you need to understand one word: smart beta. See, in a normal index like Nifty, stocks are selected based on size. Bigger companies generally get more weightage. But here, in the small case which I am talking about, the idea is different. Instead of size, they focus on the strength. Which companies are leading their sectors? Which companies have the pricing power? Which companies are actually dominating their current sectors? So they pick companies that are number 1 or number 2 in their industries. So why do you think this is important? Because market leaders usually have something called as economic moat, meaning they can survive competition, they can maintain margins, and they benefit the most when the economy grows. Now on top of that, the small case also applies multiple filters. First, the Sharia compliance. Then the financial strength. Post that, we look at earnings consistency and the balance sheet quality. And finally, the most important one is the momentum. Now, momentum investing is something people misunderstand. It doesn't mean chasing stocks. It means staying invested in stocks that are already showing good strength in the market. And also, importantly, exiting when the strength fades. So this portfolio is not static. It adapts. That's why it has monthly rebalancing. Let's look at the structure. More than 50% is small caps, around 30% is mid cap. So this clearly is tilted towards growth, which means one important thing: this portfolio is designed to outperform the overall Nifty, but it will also be very volatile. Minimum investment currently is about 73,000. Like I mentioned, this minimum investment can vary depending on what's the cost of the stocks. So yes, you need to enter with that amount, but after that, you can add amount monthly. Here's the insight most people miss. This is not a portfolio where you judge performance every 3 months, because momentum strategies work over cycles. Sometimes they underperform, then suddenly they outperform strongly. So if you enter this, you need patience. Also, have a view of at least 3 to 5 years. My honest view: if you're looking for a strong portfolio and if you want to ride India's growth, but only if you can handle volatility, this is a small case which you can definitely shortlist. The second small case, the Nifty 50 Smart Beta. This is where most people should probably start, because this is simple, this is clean, predictable. It takes the Nifty 50, it filters out the non-Sharia stocks and gives you exposure to the top companies in India. So why is this important? Because large caps gives you stability. They don't fall as much as a mid or small cap. They don't rise also as fast, but they are consistent. Now, even here in this small case, they don't blindly replicate the index. They still apply filters like momentum, quality, and liquidity. So you are getting a slightly optimized version of Nifty, which follows the Sharia guidelines. Portfolio is around 10 to 12 stocks, 100% large cap, quarterly rebalancing, which means a lower churn rate, less noise, and more stability for your portfolio. Minimum investment is about 24,000 for this small case. Now, returns since launch have been slightly negative, around -3%. But honestly, that's irrelevant because in the short term, even Nifty can be negative if you look at the past 6 months to 1 year. What matters is this. This portfolio gives you core exposure. This is your foundation. If you're confused which small case to start, this is a good option which will help you build confidence, then add aggressive portfolios. Now, let's move on to something very different. Green ethical portfolio. This is from a different company compared to the past two small cases which I've shared. This is where things get interesting because this is called a flexi cap portfolio. But if you look at the allocation, it's almost entirely small caps, 95%. So let's be very clear. This may not be the most balanced portfolio which you see. This is a growth focused portfolio. So what are you betting on? They are betting on India's structural growth, manufacturing, China plus one, infrastructure, consumption. So these are not random stocks. These are businesses that can grow as India grows. They also focus on valuations, which is very important when you're looking to invest in direct stocks because many small cap portfolios ignore valuations. Here, they try to balance growth plus reasonable pricing. The minimum investment is around 62,000, but it's always recommended for all small cases you should target between 2 to 5 lakhs, which tells you something. This is meant to be a meaningful allocation, not a small experiment which you would like to do. Here's a real insight. Small caps don't move linearly. They move in phases, which you must have seen in the last few years as well. Long periods of non-performance and then suddenly sharp rallies. So if you enter into this small case, you should not be expecting steady returns. You will get frustrated. But if you stay patient, this can outperform significantly. Like you can see, the overall returns of this portfolio for the past 3 years has been between 22% to 32% CAGR, which is one of the best performing small cases in the market. Let's get into the next small case, which is the Zamzam Capital's Sharia Infra Tracker. This is a very specific bet. This is not diversified in terms of sectors. This is saying only one thing. India's infrastructure story will play out. And if you believe that, this portfolio gives you exposure to it. Now, infrastructure is a very interesting sector because it's driven by government spending, economic cycles, and also policy decisions, which means it can perform very well, but also goes through dull phases. Now, this portfolio includes everything related to infra, power, cement, logistics, and railways. So it's a broad infrastructure play, but still it's a theme-based small case. Portfolio is mid and small cap heavy again. In this also, there is a monthly rebalancing which happens. Minimum investment is around 43,000. Return so far has been negative of -9% for the last 3 to 6 months. But again, that's short term. Here's the insight. Thematic portfolios require strong conviction because they don't always perform. But when they do, they outperform even the Nifty. So don't enter this unless you believe in this theme. And finally, the last small case which we'll be discussing is the Zamzam Capital Sharia New India theme. This is the most aggressive of all. This is not about current economy. This is about future. It has exposure into EVs, renewables, digital, data. This is where India and also the overall world market is going. But here is the problem. Future sectors are always very volatile because growth is uncertain. Valuations are generally much higher when compared to the normal regular sectors. And also, very importantly, the narratives can change very quickly. That's why this portfolio is 90% small cap. Minimum investment currently to start with is about 42,000. This also has monthly rebalancing. Return so far, like I have shared, because of the volatility is -12%, which again is very much expected. Now, this is not for everyone. This is for someone who can say, I am okay with volatility. I am here for long-term growth, at least 5 to 8 years minimum. What's my view on this? This should not be your main portfolio. This should be a satellite allocation which you should have in your portfolio if you're looking for some kind of volatility. If you step back and look at all of these 5 small cases, you will see something very important. Each one is solving a different purpose. Large cap gives you stability, smart beta gives you structured growth, small cap gives you aggressive upside, infrastructure gives you a thematic exposure, and new India small case gives you future growth. So the real question is not which is the best option for you. The real question is how do you combine them? Because this is where real wealth is created. And this is where most people need help with. Because picking one is easy. But building a portfolio with a mix of small cases and mutual funds is very important because that is what will help you build a structured and comprehensive corpus for your future. If you're looking for help in terms of creating such portfolios, do reach out to me at the number which you see on the screen. I will help you choose the right mix, structure your investments, and even get discounts on the small cases which are available. You will find all the links in the description. And just to close this, stock investing is not about finding the perfect product. It's about staying invested in a good strategy with discipline, with patience, and with clarity. And of course, a quick disclaimer, stock investing involves risk. So if you're someone who is investing on your own, please do take help of a financial advisor before doing so. Because returns are not guaranteed. Invest always based on your risk profile. I will see you in the next video. I hope you enjoyed this video. If you did, do share it with your friends and hit the like button and do subscribe to our channel. Until we see you in the next video, thank you for watching and have a good day.